Hey guys, welcome back to another trade breakdown. Today is the 2nd of October, 2023. We did a London Open live stream this morning. Um, I took two trades. The first one was really good. Took secured majority around 35 pips. It ran for another 15 pips up to about 50 pips almost in total. And then it turned around. I really thought we were going to continue, but it pulled back, gave a second opportunity, took that trade, bit of a scalp, secured 12 pips, 50%, and then tightened my stop loss, and then it came back for minus 10. So it was like 2 pip profit for that second trade. So it's pretty much going to be just going to call it a break even. Today was a really good example of why you should secure profits along the way, because I'm not going to lie, I actually thought we were going to be quite bullish today, given the US averting the government shutdown. So yeah, kind of, let's have a look at the charts. Bring that up. And we're actually, we're trading down about this level right now. So I thought we're going to push up at least to about 15,500. So I'm glad, like I secured a bunch, and I'd use the analogy that it's really important to say, like, if you're playing baseball, is to just to make sure you get on base, get some base hits. Don't try hit a home run every single day. Make sure you secure profits, especially early in the week. It's so important to put you in a right positive mindset to start the week well, and then you're trading on basically profits then for the rest of the week. Okay, so you can use, like, it's not a nice feeling to have a bad day Monday and then try to recover. Anyway, so that's not the case. So we're all positive here. So let's have a look at today. Going to go into, just to keep it quite quick. This is, I've rewound the data. So this is 7 till 7:30 a.m. UK time. This is how the candle was closing, and I was like, you know what, we could probably push down a little bit more and then start pushing bullish. But then we had the 30-minute candle close like this, right? Close like this, nice strong candle. Didn't have a top wick though, and didn't have a bottom wick. So I didn't want to trade against this. The hour candle at this stage was looking like this, okay? Looking like a beautiful, strong candle. We identified that we had plenty of liquidity sitting up here in the way of like a little trend line. We just wanted to visualize that the next hour candle was more than likely going to create like a bottom wick and then close bullish, something like that. That was the candle I was visualizing for the opening hour. Now the question is, how low will this wick go? So should I take a trade, breaking the high after it's made the bottom wick to target this much? Can I try use a lower time frames to try anticipate how low it's going to go? And by what I mean by that is, like, can I watch the lower time frames till price starts to hesitate and then start pushing more of a bullish structure, and then say, look, you know what, the low is in? Then I think that would be a good idea. Now, the third thing I can do is actually analyze this candle or candles to the left, and then try also work out where there could be some supports in this candle that price might come down to before the little time frames to start forming bullish, to try get in as low in this wick as possible and then target upside. So that's the idea, that's what we do. So let's have a look at that. Let's go to, I'm just going to go lower time frame, 5 minutes, straight down there. Identified that this was liquidity in the way of the Asian high, and plus we've got all of these rejections. Not that one. Let's look at the 3-minute time frame, a little bit nicer, a bit more detail, without going down to the 1 minutes, where we get too much detail sometimes. But rejection wick, rejection wick, rejection wick, rejection wick. So these are liquidities. So these are going to be an area to target, and this is what this new hour candle, can go hunt for. Asian high is always going to be a lovely one. If we can trade above this zone, then I thought it would be an easy job for price to continue to push up and target this next bunch of liquidity, which is in the form of like 3-hour liquidity wicks. On the way down, the question was, which liquidity are we going to stop at? Are we going to start at this one, or this one, or this one, or this one? So this is where I was like, the only question I've got, I'm bullish. I know where I'm going. I know where my target is. My first target is up here. Now, the only question I had was how low will this new hour candle go? Okay, so we'll play it forward. First, the first 3 minute candle. Okay, just broke the high. Oh, I didn't even think it broke a high. Just came straight down. So beautiful, because I like that. I like the fast move because it's the false move. And as it pushed down into these areas, now is going to give us a decent, opportunity for good risk reward. So I wanted to, at least it took out this imbalance, this one over here. And now what I was really waiting for was price to take this one and then start to show some rejections. What actually started happening was price was pushing down and then coming up, and then it was just hesitating on the 3 minute. Then it broke its high, then it came down a little bit, and then it started breaking its high a second time. And that second break, when it price had made it high on the new candle, came back down and then started to push up towards looking like it's going to break its own high, then that's the time I wanted to jump in. So I was waiting for it to take this one, but it just didn't, didn't give it. So the idea was with this candle, I would love to have got it really low. If we go to the 1 minute time frames, you're going to see prices push down, didn't quite take out this candle, then pushed up and then came down. And then as this new candle was breaking its high, okay, and breaking this high, this was the anticipation that I was going to break its high. So this is where I entered over here. Might have been just a touch little high about there, something like that. Stop loss was down here. Because it wasn't like I would have liked to have gotten it lower, but I know how London Open can move, where London does a little pullback and then it goes this direction. So I thought price could have pulled back again and then gone up, but we got a fairly easy, steady move. So I'll jump back up to the higher time frame. Okay, because as price pushed, as it pushed up, okay, this was where I secured. Pretty much, secured a lot at this time, and then it continued to run, or secured 50% at this stage. Sorry, and then secured 50% at this one, at this area right here. So this was from here to here. This was the 35 pips. Yeah, sorry about that. Secured 50% at this point as it was breaking up. Secured a little bit more. Brought the stops up to break even, or just underneath this no wick candle, and then let it run. Then there was a second trade. Second trade was take on the 1 minutes, where I thought price might come back down to this area. And I thought price would give a second go. So we see price came out, took out the runner. Then it formed this kind of movement. Okay, little trend line liquidity. Based on the 3 minute, the entry that I took was based on this candle being a liquidity candle, but it was really sketchy. So this was I managed this trade quite aggressively because this is a doji, right? To be honest, and I thought, oh, there's a chance that it could be a liquidity candle. So if it gives me a little bit of a setup, do I have a target in mind? Price as it was coming down. Okay. There we go. As it was coming down, it left a bit of a no wick up here. So I thought, well, if it is at least wicking down and then going back up, I think we can take this trade quite comfortably, at least up to here, and then hopefully we can get that continuation. Stop loss was originally underneath this guy over here. Price did the little rejection, and then the next one started to push up higher. Where's my 3 minutes? Let's go to 3 minutes. 3 minutes was looking like a, this closed nice and healthy. Closed above, looking like it was rejecting the candles to the left, potentially getting liquidity from this wick, and left no wick. So I thought, we can definitely go back up that way. So secured, this is where I secured at this point here, 50%. That was a little bit lower because of the spread. So I secured roughly around there, around 12 pips. Price pushed up, rejected here, brought price up to 10 pips below, or 10 pips away from my entry. So now I'd locked in at least a positive trade. And then it just didn't hold. Price eventually just fell away. Okay, and that was it. End of the stream. Great start to the month. And now when I look at it, I realize how wrong I was on my overall thinking that we're going to push up to here. So really, really important lesson to be learnt as well. This justifies why you just secure profits. There are times, you get FOMO because it keeps on running, but this is what made me a lot. This is what's made me successful. Just banking profits when they're on offer, not going for the home runs every single time. It would have been nice to have taken it, but you're not going to get the overall bias correct every day. I'll leave it there. I'll see you guys tomorrow for London session.